question number one really is, does it pass, right? Does it pass? So there are many questions about that because, first of all, there's an election coming up. Again, this is not a political discussion, but there's an election coming up, obviously. If President Biden wins the presidency and Democrats have control of the House and Senate, who knows? It might all pass as it sits. I don't know. If there's a different party in Congress and a different party in the White House, maybe it doesn't. I don't know. But so that's really the first question. Number two is, are there exceptions to the modified adjusted gross income for Roth conversions? If there are exceptions to that modified adjusted gross income calculation for Roth contributions now, so if your modified adjusted gross income is above certain thresholds by just general earnings and interest and things like that, then you can't make, or the amount that you can contribute to to a Roth IRA is reduced, with the exception of Roth conversions. So if you do $100,000 in conversions and that puts you over the modified adjusted gross income thresholds for Roth contributions, then that $100,000 doesn't count. You can still do a Roth contribution. I've shared with you that is a common error that CPAs and individuals make, where they discount the ability to make Roth contributions because whatever reason they don't know about that exception. So will there be an exception to modified adjusted gross income calculation for Roth conversions? So what I mean by that is if you have $100,000 in general income, and then you do a $380,000. I'm just throwing a number out there. I'm going to go over 450. So $360,000 Roth conversion. That takes you over the modified adjusted gross income amount. They may allow for that conversion amount to be set aside for that calculation. They being the folks who write these laws, and that's Congress. So are there exceptions? Does it pass? Are there exceptions? And then three, and this is the most important, I think, is what is the future? So whether these pass now, whether they pass as they are, some modifications, whether there's exceptions or where we are, these are the things that are being discussed. There are quite a few other things in this proposal that I'm trying really hard not to get into right now. But this is one of them. But we want to just focus on this area here, and that is the big change, potentially big change, and who can do Roth conversions. And again, I want you to pay attention. You might say, well, geez, I don't earn anywhere near $450,000 or $400,000. But if the tax code includes your Roth conversions in that modified adjusted gross income, you can easily be over that number, even if you're maintaining your income up to the top of the 24% bracket, because those income amounts adjust every year for inflation. Hopefully we keep the 24% bracket the way it is. Hopefully the income levels stay where they are for now. I think there's a good chance that they'll be very, very similar to what they are. But this is an important potential change and something that we should all be paying attention to. Okay. We're going to talk more about backdoor Roth conversions or backdoor Roth contributions. Boy, I did it too. I shared this with you, and I had a discussion with Sarah Brenner, the woman who wrote our first slot report at the beginning of the webinar. I said, Sarah, what's going on where suddenly backdoor Roth contributions are being called backdoor Roth conversions? Is there something I missed? Is suddenly some kind of clarification that came from a court ruling or something like that? And she said, I don't know. Just people suddenly started calling it that, and so you'll see it. She said it doesn't really matter because there's really not a technical term for the backdoor Roth contribution, but it really is a backdoor Roth contribution. It is not a backdoor Roth conversion, but this proposal will also eliminate that. We'll talk more about that in another webinar. But let's just recap here. Let me find my checklist, make sure that I covered everything we need to talk about today. Let me just go back here. So we talked about the general explanations of the administration's fiscal year 2025 revenue proposals. We focused on the section that starts on page 86, modify rules relating to retirement plans. We focused even more on page 91, which is definition of high-income taxpayer. We talked about $400,000 for a single filer and modified adjusted gross income, $425,000 for head of household, modified adjusted gross income, and $450,000 in modified adjusted gross income for married couple filing jointly. Then we focused on page number 92, item number 2, limit rollovers and conversions to designated Roth retirement accounts or to Roth IRAs. Very simply, that means if you make over those certain amounts without any exceptions applied, if there are going to be any exceptions, you can no longer do Roth conversions, even whether you're in your retirement plan, your company retirement plan. No Roth conversions allowed. Even if your plan allows it, and not many do, but that'll be taken away. And even in your own traditional IRA to Roth IRA, you've heard me say that this is the gift right now. The way the tax code is right now, the IRS says you can earn as much money as you like, or the tax code says you can earn as much money as you like. You can convert as much or as little as you like. You can convert $1,000, $100, or $1 million, $100 million in any given year. All you have to do is factor the tax that you want to pay on that. So that's a real gift. It allows us to choose our tax rate for now and for our lifetime. Really lock in your tax rate for your lifetime plus 10 years, because you're the folks who inherit your money, they don't have to distribute that until the end of the 10th year after the year you pass away. So you have the opportunity to lock in tax rates, low tax rates now, for your lifetime plus 10 years. But we may see a limitation on that, and it may affect more people than you may be thinking, because unless they include an exception for Roth conversions in that modified adjusted gross income calculation, it could eventually, probably within a short few years, affect a lot of people. We have to pay attention to these. So even if these, let's say none of this passes, none of this goes through, I don't know. But we have to pay attention to these proposals, because this is what's on the minds of the folks who make the rules. We've got big storms ahead. I shared with you at the beginning of the webinar that Social Security is going to be running out of money very, very soon. We just got an updated trustees report. So within 10 years, 2033, the trust goes to zero. Medicare is shortly after that. And there's a significant reduction in benefits of these trusts go to zero, and nobody's going to accept that. Nobody's going to accept reduction of benefit for Social Security benefits or Medicare. We also have to pay interest, increasingly huge amounts of interest. We're going to pay about $870 billion in interest this year on our national debt. The national debt continues to increase. We're at just about $35 trillion as of May 7th, 2024. We'll pay $870 billion in interest this year. Soon we'll pay $1 trillion a year, and that when we hit $1 trillion a year, it's just about every nickel of revenue is coming in to pay our national debt. And we have to pay for all these other things. So we've got to pay attention to these proposals because of the future of tax rates, restrictions, and changes. I want you to keep your mind open for these changes. This is a discussion about these critical items. Don't let these things surprise you. I stood in front of classes several years ago and I said, we have this thing right now called a stretch IRA. There's no formal name for a stretch IRA, but it's something that you can, when you inherit an IRA, you can use your own life expectancy and stretch that out over your lifetime. It's a really great tool that we can use. And I used to say, but it's going to go away sometime. It's going to go away sometime because the federal government doesn't want you to delay that tax for your lifetime. By the way, it could have been a couple different lifetimes. Excuse me. And I used to caution people, but this will go away. Folks, I'm doing the same thing here. So listen loud and clear. We should be paying attention to these proposed changes because there are things that are going to go away. And it could certainly be the ability to do a Roth conversion no matter how much income you earn. It could also, they could limit how much you could do in a conversion a year. I don't think that will happen because if the more conversions that are done, the more income tax the federal government receives. But they could limit the amount a person's ability to do conversions based on the income limitations. Now, listen, I don't agree with that because that puts I think that puts a damper on the amount of tax revenue that that folks could the government will receive if you're limiting the amount. Excuse me. How can I say this? If you're restricting the folks who can do Roth conversions, you're restricting or minimizing the amount of tax that's coming in to the government. So in the short term, certainly. But we know that the folks in Washington are not long-term thinkers, right? They think more so now. Okay, I think we've covered it all. So we got to pay attention to future tax rates restriction as changes. We talked a lot about what we see today. We're going to talk more about this in the coming weeks, and that's it for today. I hope you have a great week. I hope all that information was helpful. The good news is that we still have time, right? You might say like, oh, Jesus, just gets worse and worse every year. And we are coming. Listen, that window is closing. It's closing and closing. It's getting more challenging to schedule these Roth conversions in the time that we need to schedule them because we're arriving at the front door of the point of time that we're going to have to make change. We as a government, as a nation, are going to have to make significant financial changes, and the only source of revenue that the government really has is tax. And there's, really the vast majority of revenue comes from the middle class. So things are going to have to change. So open your mind to these changes. Take advantage of the opportunities you have now. To do things like potentially do things or look at doing things that make sense for you, Roth conversions and other tax efficient strategies. And if you have questions, you want to find out more from us, you can do so by reaching out to us at questions@attleborowealth.com. That's questions@attleborowealth.com. You can explore more information and videos at attleborowealth.com. And if you haven't already, you can subscribe to our YouTube channel. I do these webinars just about every week. And we'll see you again next week. Enjoy it. Take care. Bye-bye.